Welcome to the town hall with Raamdeo Agrawal, Perma Bull, someone who has always been very positive on Indian markets. And I would say, first of all, Raamdeo ji, welcome to the NDTV Profit Studios.
My pleasure.
We think it's been too long since you made
Yes.
it to our studios, but we're happy to have you here. And of course, our team is here to ask you questions as well. We've opened the lines to our viewers as well. So whoever wants to ask you questions has the opportunity. I hope that's okay with you.
No, that's fine, but please don't ask me about any individual stocks. That's about it.
That, of course. We know the rules. So we know the rules, guys. You know what questions to give. Raamdeo ji, very warm welcome. And I think it couldn't be a better time to talk to you right now because you've always been optimistic, bullish about the Indian markets. And in the last 10 days, those who had faith have been rewarded. Would you say?
Yeah, I mean, see, in anything that is most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal. What's big deal about it? I mean, market is up 3%. If you are not on the buy side, even if you are short, you say I'm bullish. You know, so you have to be bullish when chips are down.
No, but were you bullish, say, 10 days ago when chips really looked down? There was a point at which we thought we were brink of maybe a nuclear war. And इसमें अजीब सा ये था कि युद्ध इतने देशों के बीच में हो रही है. India seemed to have been suffering the most as far as equity markets are concerned. Were you bullish even then?
Yes. See, because there are two types of dialogue. When you have 10 months dialogue, it's a very different thing. When you have 10-year dialogue, in your own mind, different things will come up. You know, if you want to be right or wrong in 10 months' time or 3 months' time or tomorrow or day after, then, God knows what to see. Probably just about who's buying, selling and those kind of stuff. But when you are buying for 10 years, 20 years, I typically think that I'm buying for 25 years. You know, it's different that I'm not right every time. But I always buy thinking that it's 20, 25 year kind of bet. So the dialogue is very different, actually. In my mind, dialogue is very different. And that keeps me, if you see my last wealth creation study, which we did just now, see, what is the summary of the report? The summary of the report is the world is becoming wealthier year after year. If you see last 50 years, 75 years, world is becoming wealthier. India is becoming wealthier at double the speed. World is becoming wealthier at 7% nominal dollar. We are becoming wealthier at 14% nominal dollar. Now 14% is not double of 7%. If you take a 10, 15 year profile. So India is emerging very rapidly. Of course, other countries are also emerging like
it's
China.
It's also our base case, which is the reason why India is emerging more rapidly.
That is also one of the same. That also allows me to be emerging for next 50 years.
Yeah.
You know, so it's a very long story, and there are very few compounded predictable countries. One is, of course, nothing can beat US. US is one and the only one. You know, like in last 15, 20 years, US has gone from 30% of total global market cap share to 50%. You imagine, the world is growing at 7%. In that, US went from 30% to 50%.
Sir, FIIs ये सब क्यों नहीं देख रहे हैं?
See, they are for 10 months. They want to be right in the next 1 year, 2 years. I don't care. I want to be right on 10-year basis.
So you're saying that the average investor should not worry about the FII figures today. We were earlier this morning speaking with a prominent market voice, and he said exactly this, that the conversations he's having with his friends who manage India for global funds is that हम office आए नहीं आए कोई फर्क नहीं पड़ता है. No one is looking at India right now globally.
Yeah.
Why aren't they seeing all of these points that you are talking about?
I mean, India for them is very small. Say, like, if there is one micro cap where a lot of excitement is happening, I don't care. Because in my scheme of things, that 100, 200 crore company or 300 crore company, I cannot buy enough. So I don't bother about what's happening in that company. India, in their mind, is something like that. And particularly if you're sitting in US, which is now $70 trillion, market cap, where single companies are bigger than India. Well, would you bother about an NVIDIA? Or would you bother about thousands of companies in India? So it has become like that, and US is doing extremely well thanks to this AI and AI-led capex and whatever is happening there. It's crazy. I mean, it looks scary. I mean, if they have 55, 60% of the global market cap, can they go to 70, 75% types? That's the kind of run. If you look at internet-based businesses, they're the only guys. There's nobody.
From a 10-year perspective, how are you looking at AI? Are you looking at it at the next big thing? We should be worried because that's the horizon, or is it something which is being overestimated right now?
It's very tough to say for me, but it's a very big development. These kind of times happen every 15, 20 years. I mean, we saw the mobile phone coming in, then we saw internet coming in, then we saw the internet and mobile coming together. That exploded everything out here. I mean, literally not everything, payment and scheduling and your road, everything is out here, and more things are coming. So we have seen that advent, and now AI will do its own magic. In what way? Consumer AI we have seen, where you can get your essays right for your son, you can get your letter well written. Those kind of things are done. But the enterprise AI is a very different ball game, and that's where enterprise and government AI is not that easy nut to crack. It's not that easy as people are talking about. That will also require a lot of intelligent people to run it. You can write your own essay on your own, but you can't run a company with, you can't give one instruction and the company will be run. So yes, you might do your things faster, but it's also not the situation that requirement of AI or software are limited. One of the funny thing or best thing is when things become cheaper, particularly software becomes cheaper, demand is unlimited, literally infinite. So say today, if there are 1 million projects are there in the system, and the 1 million projects could be say 20% or 30% faster in execution, there are 10 more million projects waiting to happen. So what do you do with that? So I think eventually demand will explode. That's my sense. Right now for a year and a half, there will be readjustment of the old model and new model, and then eventually the new model will explode. I mean, once the software is developed, once the way enterprise will adopt AI, if that is clear, I think all the projects will be done by the same services companies.
So you think IT companies will survive, thrive, and come out smelling of roses? Because
survive for sure. How much they'll thrive, it depends on their own adaptability and at what pace diffusion of the technology happens through enterprises.
Okay. So, in fact, we have viewer queries coming in. I'm not going to hog all the questions from Raamdeo Agrawal, so don't worry. All of you viewers will get a chance. So will our team over here. But there is one quick query which has come in while we were talking. If you had to hold only 5 stocks or sectors for the next decade, what would they be? And Ravi specifically saying, is it a right time to invest in IT space given the AI disruption? Nothing stock sector specific. But there's always a debate about IT, and we get both views.
Yeah, so in IT, I have been saying for last 2-3 years since I advent of this AI, that it is headwinded. See, I met somebody very senior from Microsoft. He said the era of headcount driven model is over. See, if you have 500,000 people working for you, you don't need another 500,000 to double now your revenue. So, one part of the engine of Indian IT is kind of gone, where they used to add people at 15-20% every year. So that's gone. So will they be able to increase the productivity of the people or profitability per person at that pace? But I'm not competent to answer that. So I would still say the sector is headwinded. I would be very cautious unless I have extra insight. I would not put in more money.
Okay, cautious on IT. Let's get some questions in-house. Alex is starting off first.
So, Raamdeo ji, always a pleasure listening to you. And the question I have is more strategic in nature or tactical in nature, which is that oftentimes over the course of the last decade, we've spoken about fill it, shut it, forget it, patience, etc., and looking at the long-term horizon. But that the reality is that we remember the winners of that strategy. To say that in the 90s, you had an infy that came in and now look at what infy has done, right? But you don't remember those that have fallen by the roadside. Is there a pitfall holding on to companies that have been relative underperformers valuation-wise, because they can have a hole in your portfolio as a result of that? When do you pull the plug?
I mean, you have to see, fundamentally in investing, you have to understand what you're doing. You know, what stocks you're buying, why you are buying, what is the source of value, where is the price and where is the value. That understanding is constant, not constant, because the value is continuously changing. As the company is growing, the value of the company is growing. Say like when we got listed, we were 1,000 crores. Today we are 40,000 crores. And we are growing at 25%. So my value, I hope I am able to grow my value. So, so long as the value of the company is growing, you are pretty comfortable even if price is fluctuating a little bit. If the value of the company is not growing, then obviously you have to take your call.
But even blue chips, you're happy to sell. And
Forget about blue chip, red chips. I'm talking about your company. So let's.
I'm going to actually take you up on that. Forget about blue chips, red chips.
Yeah.
Do you think that that classification and definition has changed over the last few years? You have mid-cap companies which are at huge market cap and value. And that old way of just looking at blue chips with the depth of the Indian market right now is also changing?
Come again.
My point is, should we look at blue chips with the same awe that we used to? Just taking from the point that you made about blue chips and red chips.
So I think one of the big differences is the availability of data. Now markets will become far more aligned to data rather than this. See, when you had scarcity of data, so you are saying, okay, you are a Tata, you are an FI, you are a what is that, multinational company, because they were known for terrific management and markets were generally reasonably priced. If the market is at 12, 13, 14 P and you are a multinational company, Colgate, Lever, underpenetrated categories and all, so your management was never a concern. So you made a lot of money because of aligning with them. But now, because those quality has been so much, thanks to Buffett, the quality has been so much overpriced, irrespective of the growth, that they have been stuck at 50, 60, 70 P multiple. Whereas I am getting the companies, young companies at 15, 20 P multiple and growing at 20, 25%. Who the hell bothers about those 70, 80 P multiple? All the P's will get corrected. They will not make money. They cannot make money at 70 P. If they don't grow at 25, 30%, there is no hope in hell to make money. So even if you are the bluest of blue chip, and if the valuations are upwards of 50, 60 times, and the companies are glorifyingly growing at 5%, just run.
That's the big one. I think that's the clearest answer we can get to blue chip and red chip. Puneet has a question there.
On continuing your point, because within the Nifty, you've seen IT and FMCG, both those counters haven't performed well in the last 5 to 6 years, and the growth hasn't been there. So continuing your point, are these largely dinosaurs essentially in that sense, and will you see that change, or should people or investors look at the broader end of spectrum, and how do you look at from that perspective?
Yeah. So there are no dinosaurs in these companies, but there are phases of tailwind and headwind. In every business, while they are growing, say HDFC Bank. I'm just giving an example. Like they came in 85. They were 1,000 crore company. When they got listed, it was less than 1,000 crore company. It got listed $40, 200 crores was equity. So it was definitely less than 1,000 crores or 1,100 crores kind of market cap. Which in next 25, 30 years, it became a 12 lakh crore company. Almost became number 2 company of the country. And it was a pride of the world in terms of banking system. Okay. So they had a continuous tailwind from the management side and from the business side. Tailwind is still there in the business side. But there is a management transition. So it is taking a breather. It doesn't mean they have become dinosaur. They will, once everything transition is over, they'll again get the growth path. So, what do you do now? You made a lot of money out of them, or they look cheap relatively. And what do you do? So those are difficult things,
Yeah. No, but please answer that question. That is, sir, you
company specific.
No, company question, company specific, but those difficult questions have to answer, because I'll put it in context. I'll put my question in context. The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years. Yes. And for no fault of theirs. These are things that are out of our control. Should you be looking at them with fresh eyes?
That is what. You should have independent mind. Market is going this side, left side, you should go right side. Because the data and valuation is telling me that there's a tremendous opportunity in banking side. What has happened is the private sector banks have been bought by foreigners. Almost 40 to 50% of the banks have been bought by them. Literally, they own the private sector banks. I think 45 or 48% of HDFC, which is like almost 12 lakh crores, so 5-6 lakh crores worth of stuff is lying with them. And for somehow they're not in love with India. So they've been selling. And what will they sell? What they have, they'll sell. They can't sell what they don't have. So they're selling. So there is a continuous pressure on that. And combined with that, you have whatever is happening in the transition of the bank. So that has depressed the price. Now, if you get the premium bank at 13, 14, 15 PE, how can other banks be any more expensive? The whole sector is under crowd. And banks are extremely well. If you look at their numbers, their gross NPA has never been so low. Net NPA has never been. It is pristine banking system right now. Growing at, you saw the yesterday credit growth, 16%. I think this is the best sector to have. 16% system growth, and you are getting at 12, SBI you're getting for 10p, HDFC over 13, 14p, something like that. You know, all of them are sub 15p, and your credit growth is 16%. I think if you don't make money here, at least my system tells me that you should be making decent amount of money in the next 1 or 2, 3 years.
Okay, we have a query coming in. I just want to see who it's from. Krishna Kumar from Bengaluru. As we are speaking, there's a part where he's saying, big fan of yours, watch your videos regularly. Sir, aapke bahut fans hai jo abhi dekh rahe hain. He's saying, I have 10 lakhs to invest for 9 to 10 months with high risk return. Please tell me the 2-3 shares, not mutual funds. Sir, share to batayenge nahi. First of all that. I want to come to the thought behind the query. Invest with a horizon of 9 to 10 months with high risk, high return.
So I have no idea for 9 to 10 months, guys. I'm telling you. No, I'm all about 10 years.
Is this the worst idea for investors right now?
No, it's not. See, there are million guys, there are million ways of making money. The beauty of the markets are like that. You know, if there are million guys, actually there are million ways of making money. You have found your way of making money, you don't have to bother about jokers like us. You know, so because I have my way of making money. I am at peace. I run a company and I invest. I enjoy investing. So since I have made from zero, I can also be I can be extremely patient guy. You know, I can see a lot of adversity. I have seen a lot of adversity. I have seen 67%, 50, 67% correction in the market in my portfolios. So it doesn't, I mean, the downside, so long the story of the company is right, it doesn't hurt me. It doesn't pain me. It doesn't take my sleep away. No. I'm pretty peaceful. But is that the kind of temperament everybody has? Obviously not. You know, so you have to see your temperament and what works for you and how you have been able to in market. It's not that today is day one. So if you are there for 5-10 years, you must have found your way of making money. Just stay with that and keep making money.
If you have actually made money, if it's worked for you. That is the important part.
No, I think in India, there is, I can challenge. In last 5 years back, if anybody has come, if he has not made money, I need to get, and if he has invested, he's not speculated, of course, almost 90% would have lost money. But if he has invested purely, he would have made money, maybe not 20%, 30%, but 10, 12, better than fixed income, he would have definitely made.
I want to ask you a question very, candidly. In the last 5-6 weeks, when all of this war stuff started coming in, we saw crude go up to 110, 119, no idea, people are talking about 150. Was there any point at which the bull inside Raamdeo Agrawal was scared or worried?
No.
Were you worried?
No.
Not one single day?
Why I'm telling you? Because ultimately, we are not in the, this is not our war. We are indirectly impacted. Iran itself is just about 0.3% of global GDP. First, when this kind of thing happens, I go and see the Wikimedia. How big is the country which is under destruction? So Iran is just about $300 billion country. Okay, why it became so serious is because of Gulf of Hormuz, where a lot of this oil comes out and 15-20% of oil moves, petrochemical moves, your LNG moves, your plastics move, helium moves. So those things, I mean, so many rich countries are sending their petroleum products out. So that became an issue, and then oil started climbing. And we are 70-80% energy importer. So directly and indirectly, that is started hurting the company's performances, supply chain, and cost structure. And so like plastic products are up by 30, 40, 50%.
Yeah.
So obviously the packaging cost, so wherever packaging intensity is there, those companies have to pay, and can they pass on immediately? Obviously not. So it brings inflationary pressure. Government is absorbing to some extent petrol, diesel hike, but how long? After elections and all, they will also kind of reconsider this. So that will take away my purchasing power out to whosoever is supplying the energy. So to that extent, they'll be hurt. And hence, the corporate earnings will be hurt. So if my corporate earning was to grow by 15% next year, that might grow at 13%, 12%.
But it didn't bother you beyond that?
Yeah, and market had already corrected. So what is there to bother?
Okay, we're going to mix it up. Kush Bora for our question, and then of course we'll come to others over there. Yes, Kush.
Very good morning, Raamdeo. Two questions, in fact, if I can be a little greedy. One, typically these war-driven or event-driven bottoms, make the base for the next bull run. But with FII participation not returning, do you see that happening in the next 1, 2, maybe 3 years? That's the first part. And the second part is we've already seen that the retail participation, direct retail participation in markets is starting to dwindle. So in part, you've already answered this, but how does retail approach this? Typically you see when the markets are rising, retail comes in, and when markets go down, retail exits. So how does a retail participant and individual approach this? Asset allocation, or still continue and have that faith in the markets and still keep on investing?
I don't know. So many questions are there. Which one to? So I'll tell you. See, market is going through a structural change. In last 5 years, say till 2020, it was very FI dominated market, and Indian institutions were not that strong because retail flow was very, very limited. Come 2020, and instead of 300,000 customers, we are getting as a system 3 million customers, 10x, and till last month we got it. Okay, so this is structural shift of the Indian market, so DI flow is staggering, and it will keep becoming bigger. I don't have any doubts. Maybe for 6 months, 8 months, it could slow down. But if you look at say 5 years henceforth, it will double. If it was 5 lakhs or 7 lakhs this year, it will be 2x of that in 5 to 7 years. So that will keep increasing. There is no doubt about it. Now what FI will do? FI will keep selling. My sense is they'll keep selling till India stays here and the world stays here. Okay, they are the only arbitraging machine between India and rest of the world.
Yeah.
Because we are not allowed to go out. In fact, I wrote to one CIO or somebody that please open we should also be allowed to go out in a limited way through ETFs or something, so that the level here is little lower.
Yeah.
So that FIs don't have any encouragement to go out, and actually they have encouragement to come in. So that you open the two arbitraging machines, one through the FI and second through the domestic, in a limited way. So that is work in progress. So, but then what will happen is that India will remain expensive, and India will keep getting DI in a very, sequential way, increasing number. As the GDP rises, the contribution here will come. Third, what has happened is the interest rates have come down. If you look at your savings deposit, you get about 2.5%, 3%, something like that.
Yeah.
So obviously there is no encouragement. Your inflation is 3, 4%, 5%. There is no encouragement to the people at large to actually go and deposit in banks. And now digital system and the marketing of mutual fund Sahi is so intense that people are getting aligned to sending money for stock market. So I think we are passing through multiple forces. Most of them positive, except for FI is going out.
But have you observed active retail investor participation coming down? There was NSE data that shows active retail participation has come down in the last year.
I can tell you we run one of the largest broking,
exactly.
active broking that too, with 98% pin codes all over the country. My March revenue from broking only is 37% higher than last year's March.
What are you saying? Well, that's the data from the horse's mouth. Hiral there.
Hi, Raamdeo ji.
Hi.
I've been following you since years, and I've seen a knack that you have to even pick companies from the unlisted space. You identify gems over there even way before they are in the IPO stage. Now, the unlisted shares market is also something which is growing rapidly right now. Data, obviously, it's unaccounted for. I mean, there is no data to prove as to how big that market is. My question is, for example, a company like Lahori, that Motilal Oswal has, is looking at. A good way to look at a company like that, and in the past, we've seen something like a Manpasand also. Now, lot of learnings that come in, right? But because of one episode, you cannot stop looking at that sector or a company like that. So if you have to look at both of these scenarios and the kind of knack that you have, what would your learning be to a retail investor who wants to learn to identify companies and learn from their mistakes?
So, do I have to talk about your Manpasand and Lahori?
I want you to talk about the companies.
Yeah.
It's
So,
how
do you learn from your
course,
mistakes?
Yeah. So, learn is that, Manpasand I personally lost a lot of money.
Yeah.
So, your assessment of the person goes wrong. See, businesses, it's fine. Businesses will go up, down, their tailwind, headwind, margins can go up, sugar prices are up, pricing, that can happen, you know. But when the guys are crooks, I mean, very rarely you get that level of, you know, kind of fraud in your investment. I mean, probably this is the only one of this order. So it happens.
No, but in such a vast history of investment, you are these examples are going to come about. You're not going to get them all right.
Yeah. So yes. So this was one of them. That doesn't take away my process in the sense that we went through an entire process. In fact, my research in that company was most intensive, I would say, and we were literally talking to all the established investor, private equity investor for 5-7 years, and yet they couldn't catch it. So that's fine. I mean, that happens. This guy must be very smart. But now coming to any other company, see, one of the opportunity in unlisted is that you get access to a lot of data, and the companies are not that big. They're at nascent stage, so you can ask a lot of questions and you can see the path ahead, and then they need a lot of guidance, so you can buy at reasonable prices, you know, and typically they will go public after 5-10 years, so you have buy and hold. See, real investing is necessarily at least 5 to 7 years. If you want to be a true investor, at least few years time has to be given, 3 to 5 years, 10 years. If you're not giving that, then you're kind of a semi-speculator, I would say. I mean, if it turns out lucky, you buy something and it flies 5-10 times in next 1 or 2 years. That's what people love. But that doesn't happen every time. I bought Bharti at $25. In 2 years' time, it went 25x. So, but I didn't buy thinking that it's going to go 25x. I bought it for doubler in 3 years, and I wanted to sit through 25 years. You know, so see, starting point, thought process is one, and what really happens later on, because the events you don't have control over the events. So I think you have to have a process of investing, whether it is listed or unlisted. We call it QGLP. So if you follow the QGLP process, there's enough material out there.
What is QGLP, sir?
So quality, growth, longevity at reasonable price.
Okay.
So after doing I'm doing this wealth creation studies every year. So after, I think 20 studies or 18 studies, we wrote in 2014 that we have found our mantra of investing. Okay, that is called QGLP. We quoted it QGLP so that it becomes easy to this thing. And then even now, after 12 years, I can tell you it is a fantastic piece of research. And I use that only. So when I'm looking at a company, I look at quality of business, quality of management, longevity, and reasonable price. That's it. But I don't go to the price. See, the problem is most of the so-called investors, they start with the price without knowing what they're pricing. How do you price?
So there used to be a QSQT, now it is QGLP.
For me, it is QGLP all the way.
Okay, talking about lessons in investing, I'm just going to take a viewer question and we're mixing it up as well. So Ramya Srinivasan has written this question. I thought it was an interesting one, saying, when should an investor consider exiting a position even at a loss? This kind of a decision, I think, is also a mindset decision, not just a price decision. वो दम होना चाहिए.
दम नहीं,
या गट्स होने चाहिए.
हाँ नहीं, ऐसा कितना क्या गट्स. आप 25 पोजीशन लिए हो, उसमें एक पोजीशन खराब हो गए तो क्लीन द डैम थिंग, उसमें क्या है. So Phil Fisher, this is a Phil Fisher dialogue from Common Stocks, Uncommon Profits. He used to give 3 years. He's one of the finest growth investor, I would say, and who talks about investing. Buffett, you know, he talks a lot of big things, but he doesn't give you those, you know, how-to types, you know. So this Phil Fisher says he typically used to buy for 3 years. He will give any thought process you have developed, give a time of 3 years. Say if any company you think it is going to go from, say it is growing at 25%, so in 3 years' time it will double. So you buy a bank which is earning, say, 2,500 crores, and you think in next 3 years it will go to 5,000 crores profit. But 3 years will take 3 years. So you buy today at, say, 20 PE or 25 PE and wait. And then things work out better than your expectation or worse than your expectation. If it works out better than your expectation, you double up position. You know, because your depth of knowledge will keep increasing after investing. So you have researched to some extent as much as you can, but actually real research starts happening once you have put in money.
Yeah.
Because see, life of the even life of the companies are not in the hands of the promoter.
That's true.
You know, a lot of things happen which
There's
is
so many
beyond
external
you.
factors.
External factors. So external factors, if it turns out to be very, very favorable. Abhi if you're in packaging company and suddenly this Iran thing happens, I mean, you never thought that there will be such a problem that raw material prices will go up by 50%, my working capital requirement will go up by 50%, where do I go? So it changes the outlook.
You think MSMEs will take time to recover? Even if we do see some kind of ceasefire extension, etc., fact is crude is still at 95, 96, not at 76, 80 levels. So that some of the damage has already been done.
Yeah, definitely. Every day, every minute is damaging. So in businesses, you miss a quarter, you miss a, so then it starts calling on your reserves or your margins, existing margin. If you are running 10% margin, it will become to 8%, 7%, 6%, or maybe if you are 5% margin, you are vulnerable. So those things happen. And a lot of the marginal companies, weaker companies will have tough time in, starting now for 6 months.
Yeah, so next 6 months is going to be important. Okay, Mahima there waiting patiently.
Yeah. So you talked about how you're bullish on financials right now. When you say from a 10 years, lens right now, are there any emerging themes that you're looking at? Let's say green energy, data centers, AI, anything particular that you're tracking actively, and you think that in the next 10 years, these are the themes that, would bring in a lot of money?
Yeah, so actually I don't pick stocks directly. Now I invest in my own products, Motilal Oswal, private equity or mutual funds, and also I'm not that much on stock picking, but something comes along, I still take interest in reading the balance sheet, meeting the management, those kind of things. But I see growth all over, particularly capital market. Finances, lending is one thing, but because there's 3 million customers we are getting every month, there's a very explosive growth in the capital markets. Explosive, that's the word. It's not even linear growth, it's exponential growth. So your AMCs, broking, depositories, exchanges, God knows how, if the rules, nothing changes, I think they are sitting on a literally, path to heaven.
Are there any overhyped stories you're seeing right now where you think that the optimism is not warranted?
Stock-wise, there could be, but not
no,
generally.
in terms of
general.
space, sector, is it defense, how much more of an upside? Green energy, for example, idea is good, but ho kya raha hai? Solar, I'm just giving examples.
Yeah,
is there
but
anything like that?
It's not grossly overpriced or overplayed theme types, Like in 21, 22, there was the digital, which was just, so even digital companies, internet companies, they are quite corrected, So I would think that broadly market is very balanced, so to say. So it's not very cheap. At 21 times multiple, it's a fully priced market.
Yeah, but how much quick commerce can grow, for example? How much of these can grow? People are wondering, when will profitability come? You've always been a believer in that space. Yeah. There are enough on the other side who say that, loss-making company bar fund utha rahi hai. What does it really mean?
No, I generally don't buy companies which are making losses, but here I think there is a consumer shift, the way we run our household.
Yeah.
I think that is undergoing change, and that is not going to reverse. And the category is very large, and so one has to see how the accounting happens here. They don't have stores, so it's a cost. So there is a cost of acquisition of the customers. How much you have blown? See, you have to see if you are building a 50,000 crore turnover business, how much you have spent. If you do it through the actual stores, how much it would have costed? It would have costed you 15-20,000 crores of stores to do those 50,000 crores turnover. Here it has costed you 8-10,000 crores of losses to get you all onto the online. So, it is the way you look at it. And when you build a store gets capitalized. Whereas here, entire thing goes in the P&L. So that's what the loss you see. Yeah. If by chance you force the store companies to write off their store also in the P&L, the numbers will look very different.
Oh, yeah, that's a good way of looking at it.
Yeah, that's
Have you seen your own habits shift? Do you order a lot online?
Yeah, I don't order. I see in my home things coming in, but my daughter-in-law runs only on one of the quick commerce. Yeah.
Yeah, that's completely it.
Yeah, no, so younger people, they are far more aligned. My staff is far more aligned than we people. But yes, but then I know I have all the app here.
I'll tell you the reason I asked this question. When you are spotting opportunity, do you also take away from observation what you're seeing around you? And then, of course, you have to go and look at what the company is doing, how the management is, the numbers, etc. But how much of a part does that play, the skill of observation?
Yeah, so see, I think observation or common sense,
Yeah.
the common sense is you can't take away common sense in investing. That's the most important part, and that's where you get conviction and you have I would say conviction. See, like all these companies are making losses, but I have in my portfolio all three of them.
So some of that conviction comes from what you're observing around
yes,
you.
if nobody's using quick commerce and then I'm holding the stock, then I'm in deep trouble. But if they're growing at 100% every now and then, we are using it, and crazy things are herbal on the this thing on the go. So I think but it's speculative. It's not a classical my type of investment. I don't buy things unless there is a profit and growth in profit. So this is not my type of investment, but sometimes you take a punt.
Wow. I think ever since you took this punt, it's all proven right so far. I don't think there's anything.
Nothing like
at
that.
At least in this space, it's not been.
No, like
or you think the verdict
we are
is still
underwater in what is that other third one? Kya naam hai? Insta, Swiggy, yeah. So because there is so much of competition and all, so it's not that it has made money or anything like that. It's nothing, but it is very exciting space. See, it's again 10-month and 10-year dialogue. If you're buying for 10 years, I think you could be sitting on some fancy gains, but on 10 months, God knows whether we'll be profitable or loss making.
Yeah, the idea is to have that patience. Varsha.
Hello, sir. Pleasure to have you. My question is related to valuation. Suppose if a company is available at 80, 90 PE with a growth visibility of over 5 years, should investor invest in that company or should give a pass on? Why I'm asking this is because even if a single bad news comes, the stock will take a massive hit. So what should an investor do in that situation considering the growth visibility over 5 years?
What growth visibility? What level of growth?
Say the company is growing at 35-40% for the next 5 years.
40%, then it can sustain for 90p.
Even if the bad news comes?
Yes. No, but growth should come. See, if the bad news is related to growth only slumping, then obviously the stock will suffer. But if the growth continues, but there is the Iran war or something, then it will suffer for some time. It will come back very quickly. Then the stock deserves to be at 70-80p if it is growing at 40% for next 5 years.
I think the big distinction over there to highlight is the bad news because of something endemic to the company, a problem that is within, say, the management or the kind of business or a tectonic shift, or is it an external one which can come and go? I think that is important to differentiate.
Yeah, see, earnings is the core of valuation. If the earnings is not impacted, but external forces are, FI is selling, this is selling, that is selling, but earnings are intact, I don't care who is coming and going. Someday the guy who was going out, he will come in a rush, So tomorrow things may change. India might emerge as the only country to go to. So then what do you do? Then everyone wants to, see, today only DI is buying. Tomorrow if by chance situation comes where DI and FI both want to buy, where are the stocks?
So, just to come back, and you gave very important data points from March as well. Do you think that fear of what will happen with the SIP loyalists is overblown? I was looking at one report today which said Nifty SIP returns for investors are at 0 for the last 3 years.
Yes, it could be.
Not everyone has that patience to stay on.
Yeah, so market can go through further correction. But 10 years henceforth, the market where it has to go will be there only. In between, say, so for last 1 year, market has done nothing. For last 2 years, I think it has done nothing.
Yeah.
1.5, 2 years, it has done nothing. Maybe another year of consolidation.
You think another year of consolidation?
I don't
we should
know.
be
I don't
prepared
know.
for?
I don't know. I am looking at my companies which I have invested in, whether they are growing at 20-25% or not. My job, see, this market thing is just a time pass, I'm telling you.
Kya baat kar rahe, sir?
It's complete time pass. It's made for NDTV, Profit and CNBC only.
No, it's a lot of people sit and watch what we do. So you're saying market outlook is not something you're worried about at all. If I were to ask you like next 12 months.
Who is going to give me 10 years market outlook?
No, 1 year.
Yeah.
1 year outlook. 1 year
But
outlook
I bought the stock for 10 years.
Okay. There's one, I know we've taken a lot of your time, but there's so many queries coming in. So just a few more I will take. So from Chennai, B. Soumya is writing, what's a sector people are missing today but may dominate tomorrow? Anything that you have spotted which maybe B. Soumya from Chennai has not?
I think capital markets.
Yeah.
People have done well, exchanges have done well, BSE has done well. BSE, for your information, for last 6 years, the fastest growing company. It has grown double every year. Double every year, you imagine. From 9-10,000 crores, it is up to more than 1,10,000 crores or something.
And you're going to have...
And we're just watching like that.
But you know, scarcity premium will go when you have another player which will list.
The game is going to become so much bigger. They're going to mint money. It's all free cash flow machine. All 140 crore Janta are going to trade only in these two exchanges.
You think there'll be a time when 140 crore Janta will trade? Because
right now we have a demat accounts of about 220 million. In 2020 we were 40 million. Now we are 225 million. I think we are going to be 500 million demat accounts in next 5 to 6, 7 years. Will be the more I can bet will be the most crowded retail market in the world, capital market in the world.
Most crowded capital market in the world. Do you think the Indian investor has the stomach to also see losses? My question is this. Usually we used to see, and do you think that's changed as a trend? We used to see the moment there is sign of trouble, people would stop talking about markets. There was a time a few years ago, you know, even in parties and conversations, people are saying, okay, what's happening with their portfolio? That has quietened down a little.
So one of the what do you call new thing is that 80% of the market is new. See, only 40 million demat accounts were there in 2020. So I would assume that they had some legacy, 3, 4, 5 years of the same. The guys who opened the account only in 2020, so they are at best 5, 6 years old.
And their first time,
हाँ तो डर तो लगेगा और अभी क्या अभी भी पहली बार बाजार करेक्ट हो रहा है. See, हमने तो बहुत correction देखे हैं. Like I started in 1990 when the index went from 700 to 4200, 7x, and then it crashed 50%. Then we waited for 10 years. Then Y2K happened. From there, again it went double and again crashed. Then mother of all the bull run happened, GFC from 2003 to 2008. Again market went from 3,000 to 21,000. Again it crashed by 50%. And from there, here we are. So I think let these guys who are coming now in last 5 years, they must also know market goes down. Who is going to tell them? Unless they go through themselves.
Yeah, market is teaching them.
Yes,
so
market is teaching them.
We have two quick, you know, just in time of what we were talking, Rajesh from Noida is asking, long-term investing versus profit booking.
What to follow?
What to follow?
No, both you have to follow. See, long-term investing doesn't mean that you don't have to book profits. I bought say Bharti in 2003, thinking I'll double in 3 years, but it went 25x in next 3 years. So I had to sell because there were developments which I didn't like. Say, scam happened, 2G scam and all those things happened. I said, boss, enough is enough. हमारा 50-25 गुना होगा, भागो यहाँ से. We sold that. But I had bought it for long term.
No, but if those developments had not happened and you were
I would have been
sitting on 25x.
Yeah, I sit in so many companies 20-25 years. Today also I am sitting with companies for 21, 22 years.
Can you name, I know you can't, but anything which
Better
you have
avoid.
20-year...
21, 20, 23 years. And I think it is as cheap as when I bought it 23 years back.
My God. I know you can't give the stock name, but that would be, I'd love to know. Anurag.
Hi, good morning, sir.
Hi.
So we are very young investors. We have just started. So one thing that we have learned is diversification. So in terms of assets particularly. So in these AI-driven economies, do you think commodities are still the place, the safe haven tag that we have with gold and silver? Should we still look around that, or equities should be the preferred bets for us?
Yeah, so you do what you understand. See, don't go by textbook and don't go by what this television guys, they keep teaching you.
Sir, he works in the television company.
Go by what you understand. I mean, listen to all of them, but you have to, when they say something, all kinds of experts come. Gold expert comes, commodity experts comes, your real expert, they'll bring best of the experts. But आपको तो बात उसे समझ में आनी चाहिए ना. आपका पैसा है. वो तो चला जाएगा बोल के. आपने लगा दिया रियल एस्टेट में, मालूम पड़ा आधा हो गया भाव. So किसको पकड़ने जाओगे? So you have to go by your own understanding. जैसे मेरे को खाली इक्विटी समझ में आता है. मैं किसी जन्म जिंदगी में दूसरा कुछ नहीं खरीदने वाला हूँ.
Okay.
I am going to buy only Indian equities.
Okay.
Even to go out of India also, I understand equity. I can go and sit in New York and make some money. But I have to go and sit there to get into American markets. मेरे पास वो time है नहीं. I am pretty happy in India. So I have kept India as a country and only equity. But that is not advice to you. You must go by your own skill. If your father is in real estate and you understand real estate well, go and do it.
Okay. So what about the service class then?
Pardon?
Because for about the service class, we see gold returns like going 100%, but in equity we're going only 10-20%. Then how do we compare and how do we look at the horizon?
Try to buy what is unpopular. Don't try to buy popular.
Okay.
You know, just on the part about you going and sitting in New York, there was a report today quoting a very prominent market voice, and the quote was that his 50% of his portfolio is now outside the country. Not because he's bearish or wants to exit India, but 50% is now outside the country because he's thinking India is kind of tapped out. Do you see any of that?
We'll see after 10 years. Whether he wants to come to India or I want to go to America.
Okay, we will not definitely wait 10 years for our next interview with Raamdeo Agrawal, but I want to thank you profusely. I know we took more questions and more time over here, but you've been very patient.
Pleasure.
You've answered not just our, young investors in our newsroom, but our viewers as well. Thank you so much, Raamdeo.
Thank you.
Thank you.
It's a pleasure.
All right, we'll take a very short break, but all the action continues on the other side on NDTV Profit.